Whirlpool shares are on the move this morning after the appliance maker trounced Wall Street sales and profit forecasts. The company credited strong demand for its appliances globally and the benefit of recent price increases. Whirlpool also jacked up its full-year profit forecast by $3 from the midpoint of its prior range. Joining us moments after wrapping up his earnings call this morning is Whirlpool Chairman and CEO Marc Bitzer. Marc, good to see you again, as always. I was on the call this morning, and the team called out a $1 billion hit this year from inflation. Does that type of level of inflation, will that continue into next year?
So first of all, thanks for having me back on the show. Yes, we kind of reconfirmed our outlook for raw materials, which is a $1 billion headwind. We saw that coming already at the end of the Q1. It's something which we have to deal with, and we've dealt with because we have raised prices across the globe, anywhere 5 to 12%, and we feel we're in a pretty good position to mitigate the effects of a raw material. Having said all that, and that's just, of course, with a lot of uncertainty, but just coming in what we see right now from raw material, there will be some carryover effect also in 2022, and we will see some inflationary pressure continuing into 22. The magnitude, it's too early to say.
Marc, do you think you will have to raise prices again this year?
I mean, right now we feel we're in a good position to deal with what we so far saw coming, and we've been pretty predictable also in terms of raw materials, and so it's now been pretty stable in terms of our outlook. So right now we feel we're in a pretty good position, but I would just say, judging from the past, we when we see certain things developing and certain trigger points for price increase, we act. We don't wait, we act. Ultimately, our job is to protect our margins as a company, keep a healthy company, and that's what we've done with in the past. So if there would be changes, we would react accordingly.
Marc, we've kind of started this conversation talking about the supply side of the equation here, challenges on, getting the goods you need, the pricing there. I'm curious about the demand side of the equation, what you're seeing, from consumers and also from, maybe the commercial market as well, and where your end, markets, how they're kind of looking today as we sit here in July 2021.
Yeah, so let me maybe zoom out a little bit. The term I use also internally is kind of, we're living in an upside down world. And what I mean with that, kind of, we all pretty much grew up in an environment you had excess supply and you had to create the demand. Right now it's the opposite. You have almost excess demand and you have to create the supply. And that's just something which we all get accustomed to and used to. On the pure demand side, we are actually seeing the demand very sustainable and also in the long term. Now, obviously, with regional difference, but in particular North America, we just increased our demand guidance for this year for the industry. And I would also say for 22 and 23, we do see strong single-digit market growth going forward. And that's ultimately, particularly in the US, driven by the housing demand, despite its ups and downs, which is more driven by housing inventory, is strong and will remain strong. And frankly, the housing markets need several years of solid and strong supply to just rebalance supply versus demand. So short answers, we're very bullish on consumer demand, and that is not going to be our issue the next year and coming years.
Marc, it's Julie here. What about the cadence of that demand? In other words, yes, we've seen a hot housing market here in the U.S. We've also talked a lot about how people can't get certain appliances in the time frame they want. Have you seen people delay their purchasing decisions on your products as they wait for more supply to come in?
No, Julie, short answer is no, we haven't seen consumers waiting for it. And typically around this time of year, normal years, people would maybe wait to see what Labor Day deals or Black Friday deals there are. To any consumers on the phone, don't wait, because there's not going to be a lot of deals on the market. So having said all that, no, we did not see delays. Actually, it's quite the opposite. And we don't feel good. We're letting consumers down because we have consumers waiting way too long for our appliances, and they need the appliances because, it's what many people right now confuse in the discussion. It's not like people pull forward demand. People have been using appliances a lot more over the last 1.5 years than any time before. So you just have a higher consumption. So people need to replace certain appliances. And we feel really bad about having so many consumers waiting for our appliances.
Marc, there was a good discussion on the earnings call this morning about market share and concerns among analysts that you have lost floor space or market share, but you're saying it's more of a supply issue.
Yeah, it's entirely a supply issue. And first of all, to clarify, we have not lost floor space. Our products are very strong. We feel extremely good about the innovation which we brought to the marketplace. if you're particularly producing in the US or North America, you're more faced with supply chain constraints than, for example, if you produce in China. And right now, so sequentially, we've in the US not been able to gain market share, even though we wanted to gain market share. And that's largely driven because right now you have less constraints coming through China imports than if you produce in the US. And we have a very low share of China imports in our business. And that's just what it is. I'm not nervous about that because we consider that temporary because, again, we know what the consumer floor space is. We know what consumer preference for our brand. So we structurally feel very good. But of course, we're still frustrated that we can't fulfill all the demand which we have generated.
Last time we talked to you, Marc, it was smack in the middle of the pandemic, and folks were buying those KitchenAid mixers like the one pictured right behind you. Now that folks have gotten more mobile again, what are they buying?
I mean, it's pretty much across the range. And then again, it comes back to, I would say, as we've gone through this pandemic, so initially you just saw the typical pre-crisis purchases, freezers, fridges just for the garage because people want to store. Then we saw particularly a lot of stand mixers. People were baking, cooking at home. And now, frankly, it's across the range. And it ultimately comes back to, you just think about yourself, think about your friends. People are spending significantly more time at home as compared to the office or other premises. And that just drives appliance consumption. You just use the washer a lot more. You use the oven a lot more. And on top of that, there's quite a bit of, we all know there's disposable income. The households have cash available on their checking accounts. So you have disposable income, a general reorientation of the consumer to the home, which will not go away because people just spend more time. They're willing to invest in the home because they can't invest the money on international travel or whatever else. And that's what we're seeing across the board, and we don't see that going away very quickly.
Full disclosure, Marc, I still can't bake, but it's not the KitchenAid mixer. It's just Brian Sozzi. I just can't get it done, but I could make you a hamburger.
Hey, we have some good cooking training classes. I invite you to join one of them.
All right, fair enough.
I may join you because I'm not a good cook either.
I may take you up on that. Always good to see you. Whirlpool Chairman and CEO Marc Bitzer, stay safe. We'll talk to you soon.